35 years of my life. Okay. Our journey begins with this mug.
Name this microphone.
Whoa!
What's going on, guys? It's K-Dub here with another episode of Crypto Zombie. So today is Wednesday. That's right, it's hump day. Hope you're having an awesome week so far. If you woke up this morning and you had a look, you are seeing some green across the board. Let's dive in. Let's see what's going on. Let's check it out, guys. So now we have Bitcoin sitting at $3,477. The overall total crypto market cap spiked $3 billion overnight. XRP 31.5 cents with Ethereum at $109. Bitcoin dominance has pulled back, so you're probably seeing some of that get distributed into the altcoins. For example, you have Mobile Go up 23%, PundiX 9%, XRP, Bitcoin Gold, Factom, Wax, Monacoin, Bitcoin Cash, IOST, and BitShares all up today. Now, one coin that just went absolutely berserk yesterday was EmpowerCoin. I think at one point it was up like 9,000% or some craziness. Now, as you can see, it's fallen. It's down 22%. Look, let's just zoom into this, right? Look at this chart. Totally normal, right? Nothing manipulated about that. That's just natural price movement. So, yeah, there you go, guys. Be careful with that one. Now, having a look, we did fall out of this zone we were sitting in for quite some time. We just couldn't break out of that channel, and we've recently fallen. Now, we've gone up ever since yesterday, which is pretty good, but we are starting to have a little bit of, potential resistance, but we will see why this is happening and where we could potentially move going forward. Now, obviously, we still have our very dreaded absolute low, lines here at 2,500. And of course, JP Morgan saying 1260. We'll have to see about that moving forward, guys. But of course, so many people still have their eyes set on May because that's 1 year leading up to the halvening. And as we know, that usually concludes the previous bear markets. But will history repeat itself? I don't know. It's very different this time, guys. It's a very different space. So let's talk about what some other people are saying, and then let's get into the big news of the day. Well, we have Don Alt. You might be familiar with him. He does Crypto TA. He's pretty popular on Twitter. He says that if Bitcoin fails to remain above the $3,300, $3,500 range, it may face a quick drop to the $2,000 region. Bitcoin also could avoid a drop below the 3,000 level support if it engages in a recovery to 4,000, but based on its past performance and the lack of momentum of major crypto assets, it remains unlikely that Bitcoin initiates a strong corrective rally in the short term without a major catalyst. Now, the question is, do we have a catalyst on the way? Well, there's been a few different things that we've been speaking about. A lot of good news on this channel. We're talking about the news that came out of Samsung and we'll get into it. But a cryptocurrency trader, also known as Main, explained that the price trend of BTC is leaning towards bearish as it rejected a resistance level, echoing the sentiment of the other guy. Main said that in an event that Bitcoin fails to maintain momentum at its current level, it could drop rapidly below 3,000. Now, there is a little bit of a difference. Like I said, in previous bear markets, the crypto markets were slow and pretty quiet. High-profile investment vehicles and product launches that could potentially fuel the market were non-existent. So for investors, the active involvement of some of the largest financial institutions in the global market could serve as a reassurance of the long-term performance and strength of the cryptocurrency sector. However, this article, Crypto Winter Isn't Over Yet, doesn't really focus as much on just simple price action and stuff like that. It actually looks at just what's been going on in the space, what is the perception of the space, and could this potentially be harming investors that are considering getting in, okay? So some of the things they point out, even just recently, you had Haven Protocol. We spoke about this. They're a project focused on creating a privacy-centric, stable digital coin asset. They effectively lost their core developer 1 week back. There was a whole debacle over that. They thought it was an exit scam. And then you had the hack of Cryptopia that just happened, plus the fact that apparently, the guy still got the private keys. He's still taking more Ethereum out yesterday as well. So that was happening. And then you also had a lot of other things as well. You had Gigawatt, a US-based Bitcoin mining upstart, closed up, shut down, a mere couple days ago. Then don't forget you had all these guys getting laid off, right? It was been pretty tough. Bitmain as well. They began to purge much of their mining division, not manufacturing. They laid off their whole Bitcoin Cash department as well. There's just so many things going on. Recently Shapeshift, the company behind the exchange Shapeshift itself, CoinCap, and KeepKey, they laid off 37 employees. Blockfolio, BlockX, Steemit, SpankChain, ETC Dev, okay, are among others that also had to lay off employees in the space as well. So you had Travis Kling. Now, if you guys are following me on Twitter at the Crypto Zombie, I actually retweeted this because he kind of makes a point, So he's a former Wall Street, guy turned founder of a crypto fund, and he says that if Bitcoin is to see a resurgence, this array of shortcomings, including layoffs, exchange collapses, stringent regulations, and cries that crypto is dead, will just be the tip of the iceberg. As you can see right here, he says we need more exchanges gone, more projects shuttering, more SEC enforcements, more developer rage quits, more ICO treasury selling, more layoffs, more fund liquidations, more scammers exposed, more failed cap raises, more crypto is dead. Only then do we move higher. So I want your opinion on this. Do you think that this is what we need? I mean, do we need more of this? I think we've had a good amount of it personally, but I do understand where he's coming from. So his recent statement does come months after he did go on Twitter and say that he expects crypto to outperform everything in 2019. So some people think this is a little contradictory to his previous statements. Well, this guy said that, coordinated shutdown of quantitative easing, the largest monetary experiment of all time, will likely push crypto assets relatively higher in comparison to U.S. equities during 2019 due to their non-correlated nature. This is a possibility, guys. This could happen. Now, I just want to turn to Anthony Pompliano. He says, don't listen to what Wall Street banks say in the press. Every single one of them is building, buying, or investing in crypto right now. If you guys didn't watch the video that I had the other day about what these guys are doing, JP Morgan is busy fudding it in the background, while they're buying, right? So, yeah. So, anyway, guys, don't fall for the distractions. Just watch what they do. I got to get the Pomp on the channel. I want to see if Anthony Pompliano will do an interview. I think that'd be really cool to get his perspective. Now, here is the massive news today, guys. This is what everyone is excited about. It says Fidelity may formally launch its crypto custody service in March. I'm going to say that one more time. They may formally launch its crypto custody service in March. Okay, so before everyone goes, hey man, you're jumping the gun, fake news, they may, which means they might, which means they could, which means potentially, which means it's not solidified yet. Okay, now that we have that out of the way, let's dive in. So it says that Fidelity Investments' new crypto custody service may officially launch in March. Now, this is great because Bakkt has literally been pushed back indefinitely. We don't even know when they're going to be launching now. So we may have our eyes turned to these guys. Now, do we need them? No. Not necessarily, but let's indulge this anyway. So, the storage component of Fidelity Digital Services LLC, or FDAS, or FDAS, I don't know, however you want to say it, is already live with some assets under management. Bloomberg has reported in a story initially available only on its terminals that Fidelity was aiming for March for a formal launch. They said, we are currently serving a select set of eligible customers as we continue to build our initial solutions. The company said in the statement, over the next several months, we will thoroughly engage with and prioritize prospective clients based on needs, jurisdictions, and other factors. So, according to the Bloomberg article, Bitcoin storage is the one that's going to come first, followed by Ether custody next. So a March launch would fit the time frame previously given by Tom Jessup, the executive in charge of the digital assets. So it's unclear when the other part of Fidelity Digital Assets brokerage trades of crypto assets between Fidelity clients and market makers will launch. However, they revealed that last fall it was building a crypto trading and storage platform at the time. So Jessup said that some of its institutional clients were interested in entering the crypto space, but they needed a trusted platform provider first. So I just want to kind of point that out, guys, because, a lot of people in the crypto space say, we don't need an ETF, we don't need these institutions, this and that. I mean, look at what we did in 2017. Look at all these other previous bull runs. We did that. The retail investors, not those guys. No, yeah, I agree 100%. I don't think we need these guys. But the truth is there's a lot of them that don't feel comfortable getting in without these types of solutions. So I don't need this solution. It's not, for me, I already trade crypto on my own terms, but it may be beneficial for these guys coming in. So that's just something that you just have to look at, see it from their perspective. These institutions require a sophisticated level of service and security equal to the experiences that they're used to when trading stocks or bonds. The truth is, guys, the whole thing about, not your keys, not your Bitcoin, these guys don't care. They don't want any more responsibility than they need to have, okay? So if they can put that on somebody else and let them deal with it, they're going to do it. And that's just the reality of the situation, So while Fidelity Digital Assets initially announced it would support Bitcoin and Ether, Jessup later added that they are going to be looking at the next 4 or 5 cryptos as well in rank of market cap order. So they say, however, so far customer demand has mainly targeted the world's 2 largest cryptocurrencies, being Bitcoin and Ether. Now, I know XRP is technically number 2, but this statement was from before the flip, okay? And it says that that Fidelity is also looking at security tokens, which is interesting. And he said, we're waiting to see what develops in the space first. So that's the good news, guys. That's what we're talking about. And also we had Joseph Young. He reported for CCN last year. This kind of still ties in to the same topic, that most of the infrastructure that's being built by leading financial institutions in the U.S. market are being tailored towards institutional investors that are seeking to invest at least $5 million to the cryptocurrency market, which if you take what Coinbase is doing, that's their minimum. So the March launch for Fidelity's new Bitcoin service is welcome news to a crypto market in recovery from a rough year in 2018. With fears of a possible sub $3,000 Bitcoin price drop, pertaining to a potential crypto nuclear winter, which is we've talked about on this channel before. But cryptocurrency is clearly no longer the purview of a lunatic fringe of math whizzes and hyper-caffeinated anti-government crypto anarchists. You gotta love the way Joseph Young writes these articles. This move by Fidelity, among other major global finance players, proves that 2019 is the year Bitcoin and a couple other major cryptos enter the mainstream investment world as a sought-after asset class. So let me know, what do you think about this? Are you excited for this? Do you say, screw them, who cares? We don't need them. Drop me a comment below and let me know what you guys think. Are you pumped about this? Do you not care? Let me know your opinion. Because one thing I want to tell you straight up is there are a lot of hacks and scares and private keys getting lost and just so much stuff that's been going on in crypto. For example, over here, blockchain analytics from CipherTrace released a report this morning that showed that roughly 1.7 billion in cryptocurrency was stolen or scammed over the course of 2018. The amount stolen by hackers alone is a staggering over $950 million figure that represents an increase of more than 300% since 2017. So when you got things like this happening in crypto, this probably has a big factor to do why these guys are scared to get in as well. The scams noted in the report don't even include individual user scams. Instead, they focus on exchange exit scams, phony account hacks, and ICO scams. They account for an additional $725 million. So we got to clean the space up. So going back to, what Travis was saying, yeah, we got to clean this space up. There's too many hacks, there's too many scams, there's too much insider stuff going on, and the space really, really, really needs that next level of maturity if we want to be taken seriously moving forward, okay? Now, I want to get into some coin news of the day. I have a correction on yesterday's video. This is actually Kucoin's fault, not mine, guys. I was just reading what they wrote. But it said Kucoin delisting their projects. As you can see here, one of them was Singularity Net. Actually had somebody send me an email last night saying that this was incorrect because Kucoin actually just updated it and removed it. So sorry for that scare, guys. As you can see, I kept the previous page so you guys could see I wasn't lying. But they are not delisting Singularity Net, so There you go. Hopefully that clears it up. Now, also, in response to the BitTorrent token sale, we went over this yesterday. A lot of people were frustrated. They weren't exactly happy with their experience, but it says that BitTorrent has completed an airdrop of 5,000 BTT to all users that were eligible but unsuccessful in purchasing BTT on Binance Launchpad. I don't know how much that is. I don't think it's that much, guys. It's a very small amount, but I guess these guys are trying their best, and that's what they're doing. You know, you got one guy down here says, I want to buy 5 million. I'll give you money. Do another ICO. I don't want 5,000. Good stuff. Dump. Got nothing. Yeah. So it's kind of a mixed emotions down here. Some people are like, thank you. Some people are like, screw it. So that's basically what's going on with that. Also, we had some news coming out. Swift, the global payment network, intends to integrate technology from R3, the DLT provider, behind the Corda platform. We've kind of seen these guys have a little bit of a rift with Ripple in the past. In December of last year, R3 launched the Corda Settler, an application aimed to facilitate global cryptocurrency payments within enterprise blockchains, and which would use Ripple's XRP to begin with. R3 said XRP is the first globally recognized cryptocurrency to be supported by Settler, bringing the Corda and XRP ecosystem into closer alignment. So you guys can check that out. I'll drop that below. I'm not really going to get too into that one. Now, also, this is another one. Just going to be real quick on this, but Vitalik came out with a pretty strong opinion about Bitcoin where he compared it, saying that some of the decisions that were made on behalf of Bitcoin Core were potentially more detrimental than the fallout at Mt. Gox. So, as you can see right here, he says, I personally cannot see that it's not axiomatically, I don't ever use that word. He's a very smart guy. True that doing nothing is safest, especially in the context of a changing environment. For example, I continue to believe that Bitcoin's failure to raise its block size by a significant amount in 2016 to 2017 was a travesty and a great violation of many people's expectations of the protocol, and one that led to more total losses due to excess transaction fees than the amount lost in the Mt. Gox hack. But this is the argument that you need to be arguing against. This is interesting. And if you guys want, this is the original article. You can see here's the highlight right here. This is where he posted on Medium if you want to read the whole thing. So he basically references the excessive transaction fees that were charged to Bitcoin users during the or due to the unnecessarily small blocks. So you guys may not know the whole situation behind this. It's a pretty long topic, but this had to do with SegWit and then SegWit 2x and then the New York agreement, and then they decided to take the signatures out, but then they never increased the block size, and then Roger Ver basically said this isn't Satoshi's vision. Then they forked Bitcoin Cash, and then you guys know Bitcoin Cash got forked into Bitcoin SV. So it's been kind of madness, but he kind of came out and had this to say. I think these guys are working on it, but yeah, I mean, when you were talking about paying $55 for a Bitcoin transaction, that's completely unnecessary. And if that ever happens again and we get back to that place, then yes, it's going to be very detrimental. And yeah, then you kind of can't disagree with these guys that are making fun of Bitcoin. $55 to move a couple $100. Come on, guys, that's ridiculous. So also, interestingly enough, if you guys are interested, I found this chart. They actually go over all the Bitcoin forks dating all the way back to 2015. Some of these I didn't even know. There's a Bitcoin Pizza, not the original Bitcoin Pizza. Bitcoin Zero, that sounds promising. Bitcoin Adult, Bitcoin Green, Bitcoin Red, Bitcoin All, Bitcoin God. I remember when they came out with that one. Bitcoin Top, Bitcoin Hit, Oil Bitcoin. It's just crazy how many Bitcoins there are, guys. And then obviously we have our two recent ones right here, ABC and SV. So there you guys go. Now, speaking of a Bitcoin fork that we don't really speak of as a fork of Bitcoin, Litecoin, guys, don't forget, okay? It was a, they took the code and they basically changed it and all this other stuff, and they tried to push that narrative of being the silver to Bitcoin's gold, right? And I used to be a fan of Litecoin, still am, don't hate on Litecoin, I just don't use it as frequently as I used to. But anyway, getting back to this, Litecoin core developers are getting more interested in following the likes of privacy coins such as Monero and Zcash. So Charle Lee on Twitter opened a discussion on fungibility and hinted at the addition of confidential transactions in a future release of the full node implementation in 2019. So transforming into a privacy coin could make Litecoin more relevant, but also could introduce a host of issues on the regulatory side, considering they're already listed on Coinbase, right? And we saw even with Zcash's shielded transactions, they said you couldn't use them For withdrawals, you can only use them if you're depositing. They don't care. But if you're taking it out of your account, you need to send it to a transparent address in order to comply. So this is the situation that they brought up. Now, one of the things is, you see, fungibility and non-fungibility is something that we bring up a lot on this channel. Now, I personally had never considered this. You know, you think of a non-fungible, right? And that's something like a CryptoKitty, right? You can't swap it with something else, right? But for the longest time, I thought of crypto as completely fungible, right? You know, you swap one Bitcoin out for another Bitcoin, who knows the difference, right? I mean, if I give you a $20 bill, can you trace that $20 bill? Do you know the difference? No, you can't, right? But you can using the blockchain. So this actually changes the dynamics of Bitcoin and crypto a little bit, because we can actually see where these coins have been. So if some of those, you know, have been through, you know, have been laundered or are part of a hack or something like that, that's all traceable through the blockchain, essentially making this dirty crypto, right? So we have to see how the laws are really going to look into this. It's still kind of confusing even to me, but this is the situation that he's talking about. So they go on to say that, like a sibling rivalry, it was only a matter of time before Litecoin grew tired of sharing the spotlight, and enhancing privacy is a popular way to gain traction from new projects such as Beam and Grin, which have been massively pumped due to their Mimble-Wimble protocol, right? So we've seen that. But yeah, basically it says that Lee is focused on the fungibility issue, which has to do with the identical nature of cryptocurrencies like Bitcoin. Litecoins are not fungible. We just went over this. Confidential transactions are semi-private in that they obfuscate the amounts being transacted over the network, but not where coins are being sent. So according to Bitcoin developer Gregory Maxwell, to start, confidential transactions will be presented as an option for Litecoin transactions. Lee, however, would happily follow in the footsteps of Monero for non-optional privacy. Mandatory is much stronger privacy and fungibility, but it's harder to reach consensus on doing so. In fact, he just dropped this before, saying some light crypto reading, and if we zoom in here, you could see he's looking at all different things dealing with, short proofs for confidential transactions and investigation into confidential transactions. So you can see he's doing his research, guys. He's doing his research, all right? So, also talking about the Engine wallet swap update that enables users to seamlessly convert nearly 200 tokens from thousands of available trading pairs, thanks to the world's first native multi-swap wallet integration featuring Bancor, Changelly, and Kyber, and this is coming out of Engine, guys. So it says holders of Engine and players who earn Engine from playing games or selling their gaming items can now use the Engine wallet to convert their Engine tokens into Bitcoin, Litecoin, Ethereum, and nearly 200 other cryptocurrencies. This enables gamers to earn in-game loot, cash it in for Engine coin, and then convert it to any popular cryptocurrency without ever actually having to leave your secure Engine wallet app. So this is really interesting, guys. It also says after 2 major releases in just over a month, Engine will soon also upgrade EnjinX to support the ERC 1155 and ERC 721 token standards. So these are the non-fungibles, collectibles, game items, stuff like that, which will enable users to browse blockchain assets ranging from gaming items and collectibles. I probably should have just read the rest of that. So that is good news as well, guys. And on top of that, we have Malta-based Polish cryptocurrency exchange Bitbay announced that it has introduced Stellar XLM trading for 4 cryptocurrency pairs: the US dollar, the euro, the Polish zlotys, and Bitcoin. In other words, users of Bitbay's platform will be able to buy or sell XLM for any of the listed tradable currencies. More notably, there is a 0 maker fee for any of crypto trading pairs. Well, that's nice to know if you're the maker. Let's also talk about some upgrades, some updates to Ledger. They've recently announced a new app called Ledger Live. I'm using it. If you guys haven't checked it out, it's pretty cool. Now, users on iOS and Android can download the application to their devices. This would allow users of the Ledger Nano S, Ledger Blue wallets as well to see their balances. Users would have to scan a live QR code presented on the Ledger Live desktop version for it to work. Additionally, the consultation mode allows users to check the value of their cryptocurrency assets anywhere they go. So, they say thanks to the mobile app, you will now be able to wirelessly transact everywhere with your Ledger Nano X. In the future, Ledger Nano S users, Android smartphones only, will be able to transact as well through the same features for the Ledger Live mobile app as the desktop versions. So Ledger Nano X users will be able to connect the Android will be able to connect to Android and iOS smartphones using their Bluetooth functionality, which obviously we're waiting on this. Individuals will have the possibility to connect the wallet to the smartphone without any cables. So, guys, I'm obviously waiting on this. They're doing the pre-orders right now, but yeah, this is really cool news for Ledger. Also, guys, justice has been served. So an Italian court has ruled that the now defunct BitGrail exchange and its majority shareholder Francesco Ferrano are declared bankrupt, and that their assets should be seized in order to repay disposed customers. So the BitGrail Victims Group has called the ruling both a huge win for crypto users and a cautionary tale for cryptocurrency exchange owners. Now, you guys, if you don't know what happened, this was back in January. There was 17 million nano, at the time it was called BitGrail, that were found to be inaccessible to the exchange users. The tokens at the time of writing currently are around 14 million, but at the time that this had occurred, it was actually closer to 595 million. So, despite to this day not knowing exactly why the tokens went missing, the Italian court judged that it was the ultimate responsibility of Ferrano that things went smoothly, and thus he is being held responsible and will be required to pay back as much as he possibly can. So that is just an example of justice being served. And also, I want to talk about some really quick adoption. Russia's Ministry of Education and Science has introduced a blockchain-enabled platform for tracking natural diamonds. Supply chain logistics, guys, great use for blockchain, right? The new Russian diamond tracking technology claims to fully integrate the authenticity of the diamond products across all the supply chain, from extraction and polishing to the final owner. Based on emerging IT technologies and blockchain, the new system intends to prevent market participants from losing their financial assets, since the diamond market has both natural and synthetic diamonds as well as fake stones. So the technology has also been released by Russia's startup BitTorrent. And guys, I want to leave on this. So there's this video that came out from the Modern Investor. I don't know if you guys watch him. And this was brought to my attention yesterday in the comments. And he put out this video called How to Start the Next Bull Run. And I really think you guys should check this out. I don't even want to put it on my video because I really think he just did such a good job. You should just go watch it on his channel, honestly. But he just takes his subscribers, for example. He has he has 100,000 subscribers or something like that. And, he says $10 a week would be $40 a month. And he just basically plays out these numbers to see what that would be. So 4 million each month at the current price would be 1,142 Bitcoins. Over a year, 12 months, $480 per person, 100x subscribers would be $48 million or 13,704 Bitcoin. Then he talks about, what if every person currently in crypto put in $50 a week? What would it do to the price? So basically he's just talking about, we become the hodlers, we become the whale, we create the support. And, that's the thing. It's like you do have all these whales, but what about us becoming the whale? What if we all dollar cost average and we hold? And that was kind of what I was saying yesterday. I got a little bit of flack in the comments. Some people being like, oh, you shouldn't have dollar cost average. You're going to get wrecked. First of all, I bought down here, just to let you know. Just to let you know, guys. So we could go down. So far I'm up on my dollar cost average from yesterday. But I just like to put my money where my mouth is, guys. And personally, for me, I just think that if I'm not helping to support the cause, if I'm not dollar cost averaging, if I'm not actually hodling my Bitcoin, then how can I sit here and have this show and not actually be a part of the community and actually show my support for the space and what I believe in? So like I said, guys, you don't have to do what I do. This is a great video. I'm going to drop it below in the description. I'll drop it above right now. And also, I'll drop it at the end of the video. So, you can just click it. All right. So thank you so much, guys. It's been a pleasure. It's Wednesday. It's hump day. We're having a nice little green day today. How long will it last? I'm not sure. However, I got some pretty cool news, guys. So you may be familiar with Crown's Crypto Cave, all right? He is a trader, and he's actually going to be coming on the channel. The time difference is really complicated for me and him, so it's really hard to set up a time because he's free when I'm making my videos, and then he's not free when I'm done making my videos. So we're going to try to do a collaboration, and hopefully we can have a much better perspective into the market, into the price, and just kind of what he thinks from a TA perspective we could see moving forward, because you guys know I'm not like the greatest TA guy, right? I'm more fundamental over here. So that being said, you guys freaking rock. Thank you so much for coming back to the channel again. That's it, guys. I'm out. I freaking love you. Everyone that's been liking, subscribing, commenting, you guys rock. If you haven't downloaded the Brave browser yet, definitely get on that if you hate ads as much as the rest of us do. And I have links in the description for Brave browser. If you guys want to join the Crypto Zombies Telegram, totally free. Also, if you guys haven't picked up hardware wallets, I have links for that too. Helps the channel out. But I don't expect any of that of you. Just stop by, say hello, and that's all I ever require of you guys. My name is K-Dub. This is Crypto Zombie. Until next time, stay crypto, and of course, peace out.